Over the past 1,400 days, I've been selling cash secured put options against TQQQ. During that time, the stock crashed 82%. It then reversed. It went up 525%. This video isn't theory or hypothetical trades. These are my real life cash secured put options that I sold against TQQQ, as well as what I experienced during that time. But what you wouldn't expect is a strategy I use when selling put options that actually during that 80% decline, it actually about kept the position positive. And it's probably not what you think it would be. A little bit later in the video, I'll show you how I set up and managed my cash secured put option positions. But first, why did I decide to sell put options against a 3x levered ETF like TQQQ in the first place? As you see on the screen, there were several reasons why I decided to try this strategy several years ago. The first was we get leveraged time decay or leveraged theta. The second was to benefit from volatility crush when there was a spike in volatility. The third was to take advantage of theta and gamma swing opportunities. Don't worry about the gamma swing part if you're not familiar with it. You'll see why I did this trade in just a minute. Next, I'm going to show you how I set up the cash secured put options that I sold. Then after that, I'm going to show you what happened during the 2022 crash when TQQQ dropped over 80%. But first, the setup. Before I share a chart with you, this is exactly where I was during this entire 4-year process. Let me talk you through how I picked my setup. I know a lot of traders sell put options based on delta. I've seen a tremendous amount of videos that say you should sell put options or sell covered calls based on delta. I totally disagree with that. I think the options you sell should not be based on delta, rather they should be based on support and resistance. And in the case of selling put options, it should be based on support. So I based the strike prices of the put options I sold on support. And of course, during that whole time, I was also watching QQQ because TQQQ is a 3x levered ETF that tries to match 3 times the daily move of the Qs. So as I was watching TQQQ closely, I was also watching QQQ. And finally, just in case there was some nightmare scenario where TQQQ went to almost zero, I was buying some long-term put options throughout part of this 4-year span. And I'll show you that in just a minute as well. A little bit later in the video, I'm going to answer the question, was selling put options against TQQQ, was it actually a good idea? Or is it something I regretted over the past almost 4 years? I'll answer that in just a minute. This box in here, that's the entire time frame I was selling put options against TQQQ. It goes back to January of 2022. So we're getting close to the point I've been trading this for almost 4 years. Ignore these teal lines. That was our poor man's covered call. And if you want to see a video I did just on the poor man's covered call portion of this trade, I'll leave a link above and also down in the description below. Let me tell you what these thin orange lines are. These thin orange lines are placed at the strike price of the put option I sold, and the length of those lines is the duration I was in that position. Now the thick orange lines is the length and the strike price of the long protective put options that I bought. So as you see here, we sold several put options up in this area before TQQ had its huge drop in price. And notice that during this time, I did not sell any put options. That's because I was assigned some shares and I did not want to add to my position by selling additional cash secured put options during this time frame. However, right in here in 2023, I began to sell put options again. And you see as the stock price went up, I kind of followed the trend up by selling higher and higher strike prices. And then when it came down, I followed the trend down by selling lower and lower strike prices. Notice that sometimes we're in the money and sometimes we're out of the money. Now I prefer to sell them out of the money, like you see we did a lot, but sometimes when the market went against us, if it went against us fast, when I rolled those positions out, although I rolled the strike prices down, as you see right in here, sometimes they were still in the money. And I did that especially if I thought there might be a bounce coming in the near future. Now let me talk you through our profit and loss on just the cash secured put option portion of our TQQQ position. Here you see up top that on January 14th of 22, I began to sell put options against TQQQ. Notice over here in our cash so far column that we really were experiencing some losses, and that's because TQQQ is going way down in price. Now I was looking at technical analysis when I entered these trades, but it just continued to fail support, and so some of the positions went against us. As a result, several months into this trade, we were showing some losses. And at one point, as you see here on the far right, we're showing a big loss of over $3,100. Now eventually shares were assigned to us and the market began to level off like I thought it would. Since this is based on QQQ, I knew it wouldn't go to zero. However, I wanted to be careful because although it's based on QQQ, since it's a 3x levered ETF, it can really go way down in price. That's exactly what it did. Almost worst case scenario. Now keep in mind that this spreadsheet, it only reflects the P&L of the put options we sold, as well as our long-term protected put options that we bought. This does not show any P&L from the poor man's covered call position we were in during the same time frame. So we're just analyzing selling puts here in TQQQ. So we see that during the big decline of 2022, we experienced losses, and at some point, pretty big losses. Now I'm going to scroll down here. You'll see that as it progressed though, the market bottomed out in 22. You see we're still trading here in 22. Then our P&L began to go back up in price as the market leveled off and then began to go up. But what I want to share with you here is what happened. We had been in this trade for over a year. At this point, we've been selling put options against TQQQ for 399 days. At this spot, it's early 2023. So that 2022 crash has now ended. But notice where we're at. We did all that work and we had a loss of $115. You might be thinking, you worked for over a year and you were showing a loss? And at this point, a lot of traders would have given up. But I knew I had a solid strategy here. I just knew that I did this strategy through a very tough time in the market. This wasn't the first time that the market had a big decline, and I promise you it won't be the last time. And although I'd spent a lot of time trading this was an experimental position. So I was happy that at this point, even though the market had been way down, I was only showing a loss in our put options of $115.45. So I knew that it wouldn't be intelligent of me to give up at this spot because the market was bound to turn soon. And that's what you see happen here. At this point in early 23, the comeback story begins. Before I show you how the cash secured put option portion of this position turned out, I first want to point out a couple things that if you're going to trade in a leverage ETF, it's very important that you understand and expect these things. First, understand you'll have periods of time where you experience negative returns like I showed you. But if you have a solid strategy, you know the position will turn around. But just expect that sometimes you're going to have deep drawdowns. I mean, you are trading in a very volatile, highly leveraged ETF. So I went in expecting that. And just to note here, expect it to be like a roller coaster. You're going to have some highs, you're going to have some lows. And that's what we see here in our cash so far, or P&L so far, in this column here to the right. We had some nice highs, but then we also had some lows. But at this point, when we bottomed out, I felt pretty good about selling put options. I had survived a really violent storm, and I was only down $115.45. Every strategy will lose. You have to expect that. As long as you understand a strategy's expected losing scenario and you plan for it and you're prepared, then it's okay, you can deal with it. So be prepared for a strategy like this to go against you and have a plan in place to make sure that you can withstand that violent storm. So what was my strategy during this whole time? During that ride down and then this wild ride back up I'm going to show you in just a minute. Well, I wasn't just blindly selling put options against a 3x levered ETF. There was a lot of strategy and intentional thinking and planning behind what I was doing. When the position went against me and I saw that it might continue to decline, I immediately rolled the position out and rolled the strike price down. That repositioned me so I'd be in a more favorable position for the future move. When I saw the market was soft or breaking support or potentially going to go down in price, I tried really hard to roll those put option strike prices down, and I always want to do that for a credit if at all possible. But on the other hand, as I saw the market start to go back up, I began to roll those strike prices back up. But throughout this almost entire 4-year process, the most important thing I wanted to remind myself is that I needed to manage my risk. I did not want to break my position sizing rules and expose myself to massive losses. Now I mentioned that I rolled my strike prices up and down based on what I expected the market to do in the next 30 days or so. I just want to show that to you on a chart. So remember, these thin orangish color lines here, that's the strike price of the put option I was selling, as well as the time frame I was in that short put option. And just notice that when the market was going up, I'm still selling below the market, but pretty close to the market, so I get as much premium as possible. But once I see weakness, I immediately switch over and I go on the defensive and I roll those put option strike prices down. Then once I see it reversing, again, I'm back to rolling the strike prices up to benefit from stock price appreciation or to pocket more premium by selling those closer to at the money put options. And many of these actually turned out really well for us. As I zoom in here, you'll see what happens. Now, once it topped out here, I realized again, I need to go on the defensive. So I need to roll the strike prices down, and that's what I did here, as well as here and here. Now I'm going to fast forward to today, because before I show you where I'm at with this overall P&L, I want to show you what I've done recently and why. And this is an example of the intentional thinking that I've been doing throughout this entire 4-year process and what I encourage you to do whenever you're selling put options. So we had a nice big run up in price here with TQQQ. In fact, just since April, or just in the past about 7 months, TQQQ is up about 260%. But I did see that I believed it was getting overextended. So I wanted to be careful with the strike price placement. So notice that in last month's cycle, I sold it pretty far below the market. In fact, the put option I sold several months ago was about 20% below where the market was because I was expecting a decline. Well, it didn't pan out. We did have a decline, but it didn't come anywhere close to my put option, which is great. It wasn't challenged. I still got some really nice premium there. But then about a month ago, I was still feeling somewhat bearish on the market. You see, we've had this huge run up and I'm waiting for the cues to go down in price. So again, I sold a put option that was about 20% out of the money. I'll show you that trade in just a minute because I actually got some nice premium. So what's happened? Well, the stock did run up again, but now it's come back down and showing weakness. In fact, if I zoom in here, we see it's right at support today. So it's trying to bounce. But overall in this daily chart, we are seeing some weakness. We see it's made a new lower high as well as lower low when you compare it to that low and that high. But notice that the put option I sold is still really far out of the money. Here you see the trade I did for the current position we're in that actually expires here this Friday. And I'm gonna scroll down here to our put options. Notice that we sold the $70 November 21st cash secure put options. So when we rolled this poor man's cover call and cash secure put option, we collected $600 for this 1 month position. So although I'm selling put options really far out of the money, I'm still collecting some really nice premium. In fact, here you see the put options I sold. It's this line right in here. Notice I sold 5 of the TQQQ November 21st 70 puts. I got $1.42 per share for those. And remember, that thing's 20% out of the money. Now, before I answer the question, would I ever do this again, I'm going to show you my P&L here up to today. But before I do that, I want to share 2 important points with you. As I was preparing for this video, I thought, what can I share with you that will help you successfully trade and leverage ETFs? 2 things. The first one, the secret wasn't just in picking the right direction. Although I did a pretty good job of that most of the time, the secret to being successful was actually in the way I managed my position. Although I want to make as much cash as possible, what was more important was managing risk and trying to reposition myself when I saw the market win against me. And the second point is something that especially new traders, they're gonna have a hard time with. I've been trading options for a very long time. I know what it takes to be successful. I also know that I won't win on every trade. I mean, I'd love to, but it's just not reality. But if I have a winning trade plan, I need to stick to that trade plan. And if I do, I know in the end, I will be successful. Before I answer the question, would I do this again? Let me show you where I'm at P&L wise in this position up to today. Now we're going back to our spreadsheet. I'm gonna scroll down here to the very bottom. Now remember where we're at. We're 399 days into this trade. At that point, I was showing a loss of $115. But this is where my comeback story started. I started out with negative $115, but notice what happened. Watch this right column here under cash so far, because that's also our P&L so far column. So I started out at negative $115, and just notice what happened. It wasn't a smooth ride. Notice we got up to 2,000, back down to the 1,700 range, back up to 2s, back down to 1,900, back up to 3s, and then 4s. As you see, our profit and loss began to take off at that point. So now in just the cash secure put options that we've sold against TQQQ, just under 4 years, I'm at a profit of $11,572. But was it worth it? I mean, that's a lot of drama to go through over 4 years. In fact, I worked for over a year for free. Although it was a wild ride, I would do this again. Notice that the real money came from sticking to my plan. I knew I had a solid strategy. I knew I had a good plan. I also knew that sometimes the market goes against you. But if you stick to your plan, including manage your risk properly, in the end, a winning strategy is still a winning strategy, and it will win. In the end, I was successful not because I was trading in a 3x levered ETF, but I was successful because I used time and technical analysis to have a solid trade plan. The 3x leverage ETF just amplified those profits. So would I do this again? The answer is yes, I would do it again. In fact, I'm going to roll my position that expires this Friday in the next couple of days. For 1,300 of the 1,400 days I was selling these put options, I was also doing a poor man's cover call in TQQQ. If you want to see how I set up that poor man's cover call and manage it throughout the wild ride down, the wild ride back up, I'll leave that video down in the description below. If you'd like to get an alert whenever I buy a stock or sell options, check out the benefits of becoming a patron down at the link in the description below. When I first started selling put options, I was actually pretty scared of the process. I wanted the income, but I was scared. But then I discovered something that helped me to win 95% of my cash for put option trades. If you'd like to see what took me years to figure out, check out the video at the link above and the description below entitled, I was terrified to sell a put option until I figured out this secret. Until next time, happy investing, and we'll see you again soon.